All right. So I wanted to talk about what happened earlier this week with the stock market. The stock market, but also uh, the cryptocurrencies. So the stock bulls get a wake-up call. It's a little bit late, but call from Wall Street CEOs, and this is what they're talking about. So this was on Monday and Tuesday. This is kind of what happened in the stock market. And so risky assets slid with tech stocks and cryptocurrencies bearing the brunt of the selling after long simmering concerns about lofty valuations were fanned by a bunch of Wall Street executives that warned investors to brace for a pullback. So these came from Capital Group, Goldman Sachs, Morgan Stanley, and they just mentioned the possibility of a pullback as a healthy development. So this reinforces our thinking. So this is Matt Nally. Okay, so this reinforces our thinking that the stock market is ripe for some sort of material pullback over the near term, no matter where it's going over the intermediate and long term. So this is kind of a interesting thought that we're going to get a pullback now, and then over the long term, I think we're going to be okay because AI is still going to be great. We just need to have a pullback now. This kind of like you either believe in this AI, that the AI is going to be kind of like the next internet, and then there's no valuation that's high enough, or you're starting to see, or you saw the Neo robot, and then you realize that if this is AI, then geez, I think we're going to be a long ways away before a human robot can actually fill a dishwasher, right? So I think we're seeing. I think a lot of people are seeing some cracks, and I think they're being a little bit nice about what they're seeing and how a lot of these AI stocks they're really not that advanced, and they're not that far ahead. So nobody needs to look hard to find warnings that stock look frothy after a record-breaking surge from April's pushed valuations to level associated with exuberance. Optimism has grown heated in recent months, with many traders seeming too busy chasing the upside to worry about an expensive market. So we're so eager to look at what's going on. They didn't pay attention to everything else. And then they would look at, you would tell them and say, hey, the fundamentals don't make sense here. And they would look away and they would say, you don't know what you're talking about. You don't know AI. You're not, you don't know how that works, but I do know business, and I think that eventually this needs to make money. So the S&P 500 recently notched one of its best 6-month stretch since 1950s, fueled by the resilience of corporate America, the booming outlook for artificial intelligence, and hopes that the Federal Reserve will keep cutting rates to prop up the economy. Yet those solid gains, combined with the recent narrowness of the advance, spurred the vulnerability worries. So, again, looking at the outlook of AI, thinking that this is going to solve all our problems, but this actually is showing other issues that that people are being blind to, and they're not considering. They're figuring that AI is going to be figuring out a lot of these problems. And then the hope that the Federal Reserve will keep cutting rates. I mean, this is great, but this is also potentially causing inflation. And the rates are really going to provide more liquidity in the market. That's going to pop up, further inflate. If you think it's an AI bubble, it's just going to further inflate the bubble at this point. So, but all these solid gains, are really due to a very narrow set of stocks. We're not talking about a broad S&P 500, a majority of stocks that are moving forward. We are really looking at only a few stocks, the key seven, the magnificent seven, that are moving forward. Some of the other ones that are that are also counting on AI. But really, we're not seeing anything that is broad, that is showing that the economy is great. This is just a few stocks that are doing very well. So if you look at a clear example of that is Palantir Technology. It sank 8% even after boosting its outlook. So, you know, they had a 400% surge in the past year. This is crazy. And they have a bullish AI prospect. And then, but still, they sank 8% even after all of this. They said that their outlook is better than before, blah, blah, blah. Adding to the concern is Michael Berry. I think you all know him, hedge fund manager, disclosed bearish wagers on the firm and NVIDIA Corporation. So this is pretty, now if we look at Palantir now, it's not so bad today, but they had like an earning. You can see that the earnings here, they were estimating it would be like 16 cents, and they reported 21 cents. So this is a very positive surprise. And even after this, look at the stock after doing this earning, or just before doing this earning. This is what happens here to the stock market. And this is today, and then a lot of little notes here. But so that's what happened today. Massive drop, and then try to recover a little bit, still below its opening. So there's a couple of things here. There's also, that was not the only thing. There's not only AI, the stock market, that was affected. I had highlighted that. But also, so S&P 500 was obviously affected. Then we had also the cryptocurrencies were also affected, were also going down significantly over the same period of time. So this is to kind of like going to my point when I'm talking about that the S&P or whatever, the stock market and the crypto markets, Bitcoin, Ethereum, they're tied together. They're highly correlated. They're not a one-to-one correlation, but they are highly correlated. And what that means that if you're counting on cryptocurrencies to offset the risk of the stock market going down, what you're actually doing is that the correlation is such that a 1% move in the stock market is going to correspond to a 5 to 10% move in the cryptocurrencies. So that's up or down. So if it goes down by 1%, you can count that the blockchain, like cryptocurrencies or Bitcoin, are going to go down by 5 to 10%, and some of them might really crash. So we saw some crash with Bitcoin yesterday. We saw also Solana was also down like 5% on Monday, another 5% on Tuesday, and so the cryptocurrencies and the stock market are highly correlated. So if you need to diversify, is my point here. You need to diversify into different asset classes. I've seen it in the .com. This is so similar to the .com. It's different also, but it's also pretty similar. There's a lot of similarities. So you have to keep track of that. And the mistake that I made, I lost millions of dollars in the .com crash. Millions of dollars, okay? And what I wish I had done, and I was trying to do that, I was trying to buy real estate to diversify into a different asset class, but it didn't make sense because I lived in California. And really, so what happened is that everything went down. The whole stock market went down. It was not just a few stocks that didn't make sense that went down. The whole stock market was down, and there was a flight to, and this is what we saw also Monday and Tuesday, we saw a flight to a less risky asset. So that's why bond was up, and this is why I wish I had phone, I've seen that, but bond was up and crypto was down. So it was not just about the stock market and AI and stuff like that. It was really a flight to safety a little bit. That's why people moved to bond, and stock market felt a little risky. If the stock market feels risky, then the cryptocurrency is going to feel riskier. So this was a massive flight to safety. We saw some recovery today, but really it was, that's what we saw. I wish I hadn't highlighted that, I thought, but my thing didn't work. Anyway, so that's kind of where we are. So diversification into different asset classes. So yes, you can go to gold. The problem with gold is that it just sits there. It doesn't do much. It doesn't produce cash flow. You can hardly leverage it. So my go-to asset class, you all know, is real estate. So this is where people should be. I'm not saying move everything into real estate, but I'm saying you should start thinking about diversifying your portfolio into some real estate assets. So if you're an accredited investors, maybe invest with some kind of syndication or real estate investment fund outside the stock market. Investing in REIT is also not going to do it. REIT is a stock. It's on the stock market. It's going to go down if the stock market goes down. So that's why you want to invest outside of Wall Street with a fund like one of the funds that I own, like Red Brick Equity, or if you want to have direct ownership, then you can go and do direct ownership of your own deals, or if you want to do turnkey rentals, then you can do that as well, and so you can look for that, turnkey rentals. So this is what my point here is, and where is I had like the chat bar here. Okay. I don't even know where there's my cursor. Yeah. Okay, so that's kind of where we are. So if you have any questions, if you want to comment on everything, I'm gonna try to do more live stuff here. Whenever I see something that's interesting, I have a bunch of topics, and if you have anything you want me to talk about, just let me know, and we'll see you then. Talk to you later.